Hi, it's Jasmine coming to you on the 29th of February. This year is poised to be a growth year for the residential market across Greater Vancouver. Fundamental factors that drive our market, such as household formation, population growth, and employment growth, remain fairly strong despite concerns of potentially slower economic growth ahead. With that said, a key ingredient that drives market participation, which many had become accustomed to over the past 10 years or so, is still notably lacking, and that is ultra-low mortgage rates. Core measures of inflation have been declining too slowly for the Bank of Canada to consider aggressively lowering their policy rate in the short term. What does this mean for the market in the first half of this year? Well, last year saw some of the lowest home sales across Canada in the last 20 years. Although sales across Greater Vancouver were fairly robust. The first 8 weeks of this year have shown a sharp uptick in activity in appointments set and pre-approvals requested from lender partners. But what about actual consumer intent? Of those who withdrew from the market in the last 2 years or so, about half say they'll be back in when they see the Bank of Canada move lower on interest rates, something we expect to happen in the second quarter of this year. Some want a big rate decrease. Who wouldn't? But that's unlikely. Others want to see some indication that rates have peaked and are now falling. Still, housing affordability remains a front and center concern for many residents across our market, and the outlook for home prices in 2024 likely won't come as welcome news to bargain hunters looking for steeply discounted properties. It's not going to happen. Despite elevated borrowing costs, near record low inventory levels across all of the regions supported price increases last year, and we expect this dynamic to continue to support prices this year. On the policy front, the NDP recently announced a raft of measures, holy cow, aimed at boosting the supply of new homes to be constructed over the next decade. Although the consensus view is that these sweeping policy changes will not have immediate impact on affordability nor the availability of new homes. Truth of the matter is, these policies offer little relief for first-time homebuyers at present, since adding new supply at significant scale in our region will take many, many years. Other measures, such as an increase in the property transfer tax exemption threshold for first-time buyers or ending blind bidding, are more likely to yield more immediate relief for those struggling to purchase a home today. Last year in the Lower Mainland, residential prices were up about 4.6% over 2022, despite speculation that the significant increase in borrowing costs would cause a price decline. The simple reason is that the availability of resale homes was too low to lead to any significant price declines. While inventory levels have crept upwards since the midpoint of last year, inventory is still hovering near historic lows. For this reason, we expect prices to continue increasing modestly as increased demand brought about by lower borrowing costs meets a supply-constrained environment. And as usual, we are talking about inventory and interest rates, and those are really the two main drivers of our market. If you'd like to know specifics about your neighborhood, please give us a call. We always love to chat with you. Thanks for watching.